Heading into New York session, we have some building permits figures and some industrial production figures. Same thing. Any robust readings, any readings above market forecast, signaling strength in the US economy, is most likely going to deliver strength to the United States dollar and a further continuation move higher, possibly breaking the dollar above 106.2 to 106.400. Then we also have some sprinkled Fed speakers and MPC speakers throughout the entirety of New York session. So we need to be paying attention for any hawkish comments from Federal Reserve speakers. So just as an example, let's say tomorrow, Ixnay London session, let's just focus our attention on New York. Let's talk through some scenarios. If tomorrow we see upbeat dollar strength, if tomorrow we see upbeat data from the US front, that means these building permit figures come out robust or strong, and the industrial production figures come out strong. So you can see here the forecast, right? The previous readings were 0.1. The forecast is set to come out with an increase of 0.3% to 0.4. That's an increase. That's positive, right? That shows strength. That shows resiliency. That shows a growing economy. Okay. If we couple that with hawkish comments from Federal Reserve speakers, them pushing back the rate cut narrative and saying things like inflation is still troublesome, inflation isn't meeting our expectations, possible rate hikes on the table we're considering because of sticky inflation, having trouble bringing it down to 2%. We're seeing robust economic data, healthy labor market data, healthy PMI figures, and elevated inflation. Those would all be seen as hawkish comments. What scenario would we most likely get in dollar tomorrow and risk assets?
It brings strength to the dollar.
Strengthen the dollar, right? Risk off market mood. We'd see further continuational moves on the dollar strength, and we'd see further weight on risk assets, give or take some slight retracements. No major sell-off, no nothing crazy, insane, right? But it would most likely create intraday sell pressure on risk assets, particularly in the cryptocurrency market, as investors start to reallocate capital back into the dollar. Okay, so walking through those scenarios with you guys. I just wanted to cover that. We'll cover the CPI and the PPI figures tomorrow night. I don't want to get too ahead of ourselves, but tomorrow night, London session, that would be Wednesday morning's London session for you UK traders. You do have CPI and PPI figures to be paying attention to, which is the inflation data on the UK front. Okay, I'm typing up a PDF for you guys. You guys shall have that by tomorrow Asia session to go over and, use it as an educational tool to situate yourself on the right side of the market. So let's just go over some trade ideas. I have my delta zones updated on the charts. Let's just go over, particularly in risk assets. I'm only going to be focusing on New York session, but I'll focus on London session for GBP, JPY, and GBP USD. So XRP tomorrow, during New York session, if we see a risk on market mood, that would mean that we see these figures, building permits, industrial production month over month, come out downbeat. So if we can see the previous readings at 1.52 million, the forecast is set to come out with a slight decrease, nothing significant, to 1.51 million. We would want these figures to come out missing the mark completely. That means well below market forecast at like 148 to 149. Or anything below 150. And then the industrial production month over month, we would not want to see an increase. We'd want to see a decrease below market forecast or below previous, preferably, I don't think this is going to happen, but preferably below zero in negative territory. So if tomorrow these readings printed at negative 0.1%, that would be downbeat. That would be well below market forecast and well below previous readings. That would most likely exert sell pressure on the dollar and prompt a risk-on market mood and a recovery in risk assets. A scenario like that, coupled with dovish Fed comments, all the Fed speakers tomorrow, Fed member Jefferson, Fed member Williams, Fed member Barkin, and Jerome Powell, reiterating to the market that they still see rate cuts happening in 2024 would also further support a risk on market environment, bolster or strengthen risk assets, and weigh on the dollar, creating a pullback scenario in the dollar from the most recent uptick that we've seen, and it would most likely lead to a recovery in risk assets. So in that one-sided scenario, a risk on market mood, hopefully I broke that down for you all in a way so you can understand. If we saw those fundamental factors with no new fear, uncertainty, and doubt pumped in the market via these geopolitical escalations, and we can see XRP hold above this previous low. So scenario number one, a deep retracement down into 42 cents to double bottom out to see a recovery from the 42-cent range, a slight retracement back down into 46 to 48 cents, or a break above these previous highs at 51 cents, since most recently the uptick into 51 cents was not enough bullish momentum to break that. I would want to see a bullish break above 51 cents and a retest to see price continue higher, potentially targeting immediate targets for scalp positions, the 54 to 55 cent range. Take profit 2 would be anywhere between 58 to 59 cents. As long as we can see a risk on market mood and we can see the 42-cent psychological level hold or this previous wick to the downside where price came down to some exchanges to 41 cents, others exchanges it's looking like it printed to 42. Risk off market scenario, so the inverse, which would be upbeat data from the US front, coupled with hawkish comments from Federal Reserve speakers. So just looking at the data, if we saw building permits come out robust and industrial production month over month come out elevated, so for example, tomorrow, we see the previous readings at 152, the forecast with a slight decline down to 151. If the actual print tomorrow comes out at 153 or 155 or anything higher than 152 at previous readings, that would be robust or elevated or an increase showing strength. Same thing with industrial production. Anything above the previous at 0.1% or elevated above the forecast. So if the reading came out tomorrow at 0.5, 0.6, 0.7, that would show strengthening in the overall US economy or industrial production service. And that would most likely exert downward pressure on risk assets and strengthen the dollar. Couple that with hawkish comments from all of these Fed speakers, them reiterating to the market that their job or their fight on inflation is nowhere near finished. They're going to have to keep interest rates higher for longer. They're potentially considering hiking rates. They're pushing back the rate cut narrative, right? That would dampen risk market sentiment and again, further weigh on risk assets intraday. In a scenario like that, give or take where the market is at during New York session tomorrow, if we see a risk off market mood and we fail to break these highs at 52 cents, I'd be looking for a scenario where we could see some scalp positions back down into the lows at 42 cents. If we break the 42-cent threshold, my next immediate bearish target is going to be 38 cents. For price to come and clear out any euphoric buyers who tried to leverage the most recent drop in price that we got here and most likely have open buy positions underneath of these lows. So I'd be looking for a further drop if we can break 42 cents and we see a risk off market mood for us to see a slight drop down into 38 to potentially even 37 cents. This is under the condition that we see a further risk off market mood and a failure to break bullish and hold bullish above 52 cents. I told you guys for my dollar cost average positions, I have buy limit set at 38 cents, 24 cents, and 17 cents. Now, if we look at the 38-cent psychological level real quick, I just want to show you guys this. I don't want anybody to get fearful if this takes place, keeping in mind structure on the higher time frame. Remember that these financial institutions trade off of higher time frame structure. So looking to the left-hand side, if price did come down into 38 cents, it would still be respecting bullish structure on the higher time frame, where we can see clear demand in this area. The whole entire debacle in 2022 happened. The 38-cent psychological level acted as quote unquote a resistance barrier before price firmly broke back above it, retested it, consolidated around it for quite some time, used it as a catalyst, as a momentum psych level to push price from 38 cents all the way up into about 94 cents, where here in this area is when we had the July 13th XRP lawsuit thingy, whatever, because people are like saying it doesn't exist anymore, come into fruition, and we saw the bullish continuation move. So if price does come down into 38 cents, we're not going to be fearful in this community. We're going to be looking at this as an opportunity. At least I will be. I can't tell you guys what to do with your emotions. I will be buying a lot more XRP if that happens. You guys have seen my dollar cost average level in XRP is roughly around like 34 cents. So, 38 cents buying a bag of XRP around that level won't change that one bit. Okay. Bullish and bearish targets on XRP out of the way.